All right, well, just hit record and go. That's what I do. So I get the idea, I pray, and then I make the video. I guess I don't always pray on every video before, but I did on this one. So this is gonna be good. All right. Not that the other ones weren't, but the title of this video is gonna be, something like basically Forex 101, small lot sizes equals big withdrawals. Big withdrawals. Now, what do I mean by that? What is the significance of that? Well, it's not about, just making a killing on a trade and, oh yeah, let me just go ham on this trade and maybe you get lucky sometimes, or maybe you get lucky a lot or whatever. And, or whatever, but all it takes is just one bad trade to wipe it all out, right? Say you start with 100. I've turned, I'm not bragging, I'm just saying I've done live trades with live money where I turned $100 into, I think one time it was like $1,500. I flipped in like, it was like 24 hours or something like that. The time before that I did 1,300. And it was, I think, multiple trades. It wasn't like one trade, right? But it was like multiple trades within those 24 hours, and it was just like flipped it to like 300, and then I flipped the 300 to like whatever, 1,000 or 1,500 couple different times I did that. But anyway, but all it takes is like one bad trade with that kind of going heavy like that to knock you out, right? So what I mean by this, and let me get a color here. Let me try this color here, and I'm gonna try this color to say about taking positions. Hopefully you can see. Hopefully there's enough light in here. But basically small lot sizes. So what we're talking about here is basically you have with my channel, my system, me. I'm based on $100 account, small accounts, right? So we're talking small account, right? So we have this small account equals $100. Okay, so therefore, and this is the reason why I'm doing this, talking like that. I'm saying, so a small lot size, right? Small lot size, right? That's what that is. So that equals, basically, 0.1. Some people might consider that a different, they might say, well, that's a big lot size or whatever like that. I don't know. I think because I was using before different ones, like with a $100 account starting off, I was using like 0.25 lots, quarter lots, or even sometimes I was going in the beginning before I really realized, hey, this is not a good idea. I was using like 0.5 lots just for one position. And so the reason why you want to use different small lot sizes is because because like this. So let's say we don't have times on this, but let's just say you wake up same time every day, 7 o'clock, 7 a.m. Okay, so let's say 7 a.m. is we could do different things here. Let's see. Go up there. Whatever. Let's just say 7 a.m. is right here. Okay. 7 a.m. Okay. And let's say you woke up right here and boom, you took an entry, right? Whatever you saw something, you saw it coming off of this, and you said, "Well, I think it's going to go higher," or maybe maybe you waited, right? You were like, well, it's at the top. Let me wait for this pullback, or let me actually do this way here, because this is gonna make this would be actually better here. If I say this, if I say that this is 7 a.m. Okay, does it look okay? 7 a.m. Yeah, well, you know what that is. 7 a.m. Okay, hopefully that looks okay. I know it does not look okay. 7. Is that better? 7 a.m. Yeah. Okay. So let's say you were right here. You saw basically, this. You're like, okay, boom. Okay, boom. That's a support level. Boom. Bounced off this. Okay, now we're above here. We got this trend line here. We got this trend line here. So you're like, okay, now we got a test. Now we've got a previous, support and resistance level right here. And maybe this goes back further, potentially, this could go back further, but we don't have, all we have is the price data that we have on this screen, but you could say that maybe that goes back further. But you wake up here, you're like, okay, this is like a good place for an entry. So you take an entry right here. So you take a 0.01 or 0.1 lot, actually. 0.1 lot right here. And okay. Now, if you had taken a quarter lot or a half lot, something too heavy, or you took a double tap on a quarter lot, or you might take double taps on a 0.1 lot, it's still not the same as taking a double tap on a quarter lot, right? Okay. That was an idiot rookie mistake, and I shouldn't say idiot. We don't want to speak to ourselves that way, right? Because we don't want to speak or think about other people that way, right? So we got to treat ourselves good, and also then therefore we will also, because how we treat ourselves is probably going to be how we think about others and how we treat others. So, but let's just say that we took a 0.1 lot here. And we wanted to see what the market was going to do, right? Because the market, we know it goes up and down, up and down, up and down, up and down, right? So you're most time going to get a chance for another entry, even if after you take this it goes up, it's still going to pull back at some point. Obviously you could think about taking some profits, which is the reason why I talk about double taps, because you can take half up here and then wait and then come here and get another position and then go up. So if you wanted to stick with the 0.1 size of per spot on the chart, then obviously you would go to something like a 0.05 lot, right? Sorry, I just got done eating a Publix sandwich with honey mustard. So you would go to like a 0.0. Sorry about my constant redoing. 0.05. Okay, just for consistency. Same different color, isn't it? Same shade, I guess. Anyway, God, I hate that. I'm sorry, it's so annoying. Apologize. But anyways, yeah. So you could take down here. You could do a double tap. Where you do 2 times 0.05, like that. Hopefully this is going to be okay for you. But then the reason, obviously is like, right, just in case it does go up, if you did a double tap, see, you still have the same. And this is something to think about right here, actually. And this is one of the reasons I'm making this video, so that I can kind of learn as I talk and sort of explore all these ideas and everything like that. So now let's just say you were just talking about a 0.1 lot, right? Okay. you know, but let's just say you were just going to say, well, you know, instead of taking a 0.1 lot, I'm just going to take a 2.5 lots every time. So every time I want to take a 0.1 lot, I'm going to take 2.05 lots, right? So you take 2.05 lots. This gives you more options, more flexibility to say that if it does go up, let's say that it just shot straight up, right? Okay, maybe you take both positions out, right? Or if you think that it's going to pull back, like maybe it turns around right here at this 2,500 level, and you think, well, it should bounce off of here. You know, worst case scenario, bounce off of here, or whatever. If it breaks this trend line, you know, maybe it'll go back to the next support level and continue to go up, right? Because this is a steeper trend line. This is a more, you know, it's a little bit shallow. Probably in between would be like ideal, but whatever. 45-degree angle is like the ideal, perfect symmetry of price and time in an uptrend. You know, it's 45-degree. So I don't know what these are. Probably not 45 degree. That might be 45 degree right there. But anyway, so let's say you took, you know, 2.05 lots here. Now you have flexibility. Now you can say, all right, I'm going to take half up here just because, hey, you know, we're here to make money, whatever. Or you may take all. If it comes way up here, you probably take all. But if it comes like right here, you may take half just to say, okay, now we have a little bit of cushion so that if it does go into drawdown, if it does go back down below here, now I have the profit that I made from when it went up, right? So I don't know why I extended that trend line, but now you have, if it does go up here, now you have cushion for when it comes back to drawdown. You're basically, this would be like break even if you got out of both positions here. Like if it broke down below this support level and it came down here, you could be in trouble, right? And then you would get out, but you would be a break even, versus if you had held both of these positions and didn't take profit, or if you just took a 0.1 lot and you went up here and then you waited for it to come back to drawdown and you're just holding on to that, and now you'd just be negative, pure negative, right? And then you'd be in a really bad position right here. So that's what I'm saying by that. You know, and let's just say if you went up here and you took half profit here and then continue to go up, well then, okay. Well, you know, you make your decision. You take another position here, or you just wait and you take your profits here and you try to see if it's going to have a big correction. But you see that the small lots, you know, it's just like, you know, it's just like not going all in, right? Or going all in, right? So if you're playing, I probably don't want to use like poker analogy, but I mean, it's probably the best one to say, like, you know, if you're going all in, or if you're putting all your eggs in one basket, right? In that case, so, you know, it's just to say you're not going to be able to survive much drawdown. You're going to be, you know, if it is an uptrend for reals, then you're going to be able to continue to stack positions, right? So you take one here, and we've already talked a lot about what may happen here, but let's just look at the actual chart that's actually on here, and let's just say what we actually would do. So let's say we took 2.05 lots. We're up here. It's too soon. We don't want to take profits yet. Okay. So then it comes down here. We're like, okay, boom, it busted down here. So then you have a decision to make. Then you can say, well, let's see if it, because we have this nice support level here. 1, 2, 3 tests here, maybe more to the left if we look. You know, we look at the significance here. It's a 0.1500, so it should bounce up, because as we said in the video where we had key levels, we were talking about just the pure key levels where I actually drew this chart. I think it was the one where I drew this chart. Yeah, it was. Or to say that the price tends to bounce back and forth between 1,000 zones like this, and so, you know, a lot of times it'll do some stuff here, and it'll get this 500, and then it'll do something, and then it'll get above the 500, and then eventually it'll come up to here, right? So you're thinking that, you know, okay, well, it's probably this is gonna be a significant area to watch, this 1500 zone. So you know, if it does, you know, do something here, I have drawn a double bottom, even though it's not really like at the end of an uptrend. It's more like a continuation double bottom, you know, whatever. But yeah. So anyway, you have this. So maybe, you know, you have these two positions here, these 2.05 lots, and maybe you take another one here, right? So you take now you have to decide what you want to do. So do you want to take another 2? Because if you take another 2 0.05 lots, then if it goes down here, then you're in like triple drawdown, right? Because you have multiple positions. Actually, it'd be in double drawdown if you're just talking 0.1 spots on the chart, right? Like 0.1 and then 0.1, even though they're divided up into 0.05 to 2.05 lots. So you'd be like in double drawdown right here. You'd have 2 positions in drawdown. In other words, two areas where you bought that would be in drawdown, right? And so then you're not doing so good unless it went up here and you took some. Cause see, I was talking about how it can bounce, back and forth between these 2 areas. So maybe you took some profits up here, and then maybe for some reason it broke down here, whatever. But anyway, right now we're just saying that you have to make that decision for yourself. So I might just take 1 because I don't want to get so heavy. In other words, I might take just a 0.05 lot because I don't want to get so heavy, right? But that'll give me a little bit of extra money for when it continues to go up. But I don't want to maybe place such a bet when I'm in the negative position. And this is really where the value of this, the real value of small lot sizes, aside from everything I said already, but like one of the key things about it is basically the idea is not to double down, right? When you are in red, when you are losing money and you're bleeding, you don't want to bleed more, right? Because you got to think like your lifeblood in your veins, you have blood in your body that keeps you alive. And if you're bleeding, you don't want to risk more blood loss, right? So you may just want to sit back and chill and wait for it to get back above here. And then even though you would miss out on all these pips, you have to think about risk, right? So the risk of basically taking too many positions and having it come down here to retest this 1,000 level, which it can do. Certainly it's within the right of the market to do whatever it wants to do. We look at tendencies, percentages, probabilities, risk, all these kind of things. But at the end of the day, the market is always going to do what it wants to do, and it doesn't care what you think. It doesn't care how you feel. It doesn't care what positions you took where on the chart. It kind of does depend on how much money you're buying and selling and stuff like that, because obviously price movement is buying and selling. So, okay. But for the small retail trader like us, $100 account, you're nothing. You're nothing. You're just like, what it's gonna totally just bend you and break you if it wants to, right? Because you're only $100 account. You're nothing. Okay. It's to the market, to the beast, right? So you may just want to chill and then wait till it gets back up here and then buy again, right? Because you're only in drawdown for this position here. But if you buy here again, now you're, like I said, you're in drawdown for all these 2 positions, and then bad things can happen. But like I said, so if you just kept this position and it broke down below here, you could be going for a loss, or if you took that up there, you can be going for break even, and then you figure out what you want to do. Do I want to start selling? Blah blah blah. So. But don't be too quick to change. Be quick to, I guess they say, be quick to get out of a losing trade. This is why you go with small lot sizes, so that if it does go against you, you're not too negative. You're not losing too much blood. So if it goes back up here, now you can take another position. Like I said, yes, you lost out on 250 pips right here, or 500 pips in this case. But you might have bought right here. Like right as soon as it starts going back up, you can be thinking, okay, it's probably going to keep going up. So let me go ahead and take another lot here. Or another 0.1 position on the chart, even if it's 2.05. So then now you're going up. Now, when it gets up to here or wherever you want, you can start taking a little bit of profit. Like you could take one of these positions out up here. So you have the option of doing what you want. So you want to buy here, or buy here. I would say probably safest way to play this would be to wait for it to come back up here to this level and turn this into support, and then buy here. So this is probably what I would say. Do point or 0.1 or Actually, let me do 0.05. 2x 0.05. Yeah, so now you're having this positions here, this position here on the chart. And now you can take profit up here. You know, whatever you want to do. You could close out take profit on 0.05 here. Take profit on 0.05 here, or you could just hold and wait and try to take profit up here to the next major level, right here. You know, or take profit for all positions. And now, I mean, a lot of times what you'll see on the chart is a huge area of green, like something like this. You'll see this, you know, at the bottom of a market or at the top of a market, right? So the actual bottom of this market, you know, probably actually is probably going to look. You're probably going to have all this. Supply zone right here. Okay. So a lot of times that's what you'll see. It almost looks like water now, like the ocean of supply down here. But yeah, and then you'll have the same thing up here. But so that's pretty much the video right there. I'm getting up on over 20 minutes now, but the key is to not risk too much, because, you know, a lot of times the market, the big move of the day will be like 1,000 points, like on as you say, GU or GBP USD, Great British Pound versus the US dollar. A lot of times you'll get, you know, at least a 500 point move, 500 pip move, or, you know, you'll get a 1,000 pip move a lot of times. Almost every week, multiple times a week, you get 1,000 point moves. Sometimes, you know, occasionally you'll get more than that. But all it takes is a 0.1 lot position and 1,000 points on, you know, with your $100 account to make $100 on that position, right? So if you buy here, right, at this, let's just say if you buy here, right, and it moves up to here, that's 100 points just on this one position. So we're talking about buying here and buying here. So you have a 0.1 here and a 0.1 here. Well, by the time it gets up here, that's $200, which I know is like, you said, it's not much money. But the thing you got to remember about this technique here is that this technique allows you to, once you're in profit, like basically for me, I would have seen the rejection off of here and rejection off of here, and I would not have taken another position, obviously. And I would have come down here, and then I might have been tempted, but that's the thing. You don't want to be too quick, because the thing is, when the market is going in one direction, it doesn't just turn around. Usually, it does not just turn around like that. Usually, there has to be some price action. There has to be some base building, some whatever. Now, on tops, it's more common that it will turn quickly back around. But on bottoms, it takes some time to build that base up. So you don't want to, you don't want to be too eager, right? I talked about that in one of my other videos, to take another position. So you don't want to be too eager to take another position. You want to wait, but you want to think about what's going to do here. And so when it broke down below here, I'm like, okay. So then I'm like, well, what's going on here? Boom. If I had a big bullish candle here, right? Like if I had a big bullish candle here, because it's going to get kind of, but yeah, big bullish candle here, then definitely that would be, you know, something to look at to say, okay, take another position. But like I remember I told you about that. So, you know, you might be waiting until you get up here for another big bullish candlestick right here, right? And I know it's getting messy, but you know, if you see another big bullish candlestick here, then you know you might buy here, right? So instead of taking profit, you're stacking. So you're putting 2 times 0.05. You're waiting. You don't really see anything. You just saw explosion up to here. So you don't really buy here. You might buy here, but then you see that. So you got to think about the tendency to come back to the trend line. So you got to kind of think about, well, am I going to wait for it to come back to the trend line and see what happens? So maybe you wait to come back to the trend line right here. And then boom, you take another 2 times 0.05 right here. And so what happened is you took 0.1 here, and we're talking cumulative on chart position value, even though it's 2 times 0.05, let's just going to say 0.1. So you took 0.1 here, 0.1 here, 0.1 here, and 0.1 here. Well, by the time it gets up to here, now these will be over 100, right? Because it's, you bought under the 1,000 pip move, so these will be over $100 profit. This would be $100 profit. This would be, you know, whatever, like 150 profit, or, you know, if you bought like right here, it'd be like 125 profit. So if, let's just say you took another position right here, and let's see, you took 2 times 0.05. Okay, that would be like maybe 100. This would be over 100. This would be about 100. This would be about 675. This would be about $50 profit. But all that adds up. Okay. And the thing is if the market, if you buy and the market keeps going up, and you know, like I said, if this had turned into support up here, I might have bought. But you got to think it could break down, so you have to sort of manage that risk of that. But the beautiful thing is if you're in profit, now you have a cushion. You have a cushion. And if you waited and you watched this video for 27, 28 minutes, this is my gift, God's gift to you, because this is the real meat of the message right here, is that doing this in this way, it gives you cushion, right? So you're up $10, $20, whatever, 25, 30, whatever amount you're up. Next time you see that buy position and you're in profit, you have that cushion. Now, yes, it could turn all the way against you. Okay, that can happen. You have to manage that and say, what am I going to do? And that's like a lot of times where it can get frustrating. So you really have, but you do really have the chance that if you pick your spots right, and this is why practice, it's just like with, you know, any sport that you play, you got to practice. Anything that you do, any instrument that you play, whatever you're doing in life, you got to practice, become great at it. And sorry, I'm not looking exactly in at you. I'm looking over here at my face. Sorry, but but if you pick your spots right, let's say you started buying down here, boom. Now you buy here, boom, boom, boom. You're never even in drawdown. You know, that's not always going to happen, which is why I started over here to say that can happen, right? So you have to sort of play that out and figure that out. But like I said, you can just keep stacking positions. And then, but if you took all these positions, 0.1, 0.1, 0.1, let's just say 0.1, 0.1, 0.1, 0.1, 0.1. You know, you have over 100 right here. You have two that are over 100. That's like over $200 right there. So let's call that 200, 250, or 225 bucks. You got 100 right here. So that's another 300, just 325. Right here, 75. So you're up to 400 now. And then if this is worth like 50, now you're like 450. You started with 100, now you got like $550 at the end of the day. And I just dropped the marker. So there you go. That's going to be about the video right there. Hopefully it was helpful. And I'm going to go and study, because I got to read this book, which I'll show you. These are my two books that I'm reading right now. These are my 2 books that I'm reading right now. And so I gotta go study, and I'm also gonna look at the chart and see what it's doing right now. What is today? I think it's I don't know. It's April, just after Easter, the Monday after Easter. So I don't know, April 16th, 2022, something like that. I'm not sure, but anyway, today's the Monday after Easter, 2022. Okay, all right. Well, I hope you had a good one, and appreciate it. And that's that. And oh, I got a spelling error up there with Rawls. All right. Thanks so much for watching, and appreciate it. And y'all have a good one. I'm trying to get like a, so I can get a good screenshot, but for my thumbnail. All right. See it.